Mark Lehmann joins us, JMP Securities CEO. JMP Securities is now part of Citizens Financial Group. We covered that deal. Mark, it's good to have you. It sounds like you agree with Cathie Wood, and that is investors are sort of missing the big picture on some of these so-called stay-at-home names. Which ones would you suggest?
I do agree, and thank you for that shout-out on the Citizens deal. That's brand new. There are some names of the high multiple, fast-growing winners from the stay-at-home that have been equally afflicted this year. I'll put Peloton as one of those. That stock, as you show, is down 70+% from its peak. But connected fitness and that product being the best in class, I think, is one that has far more durability than just being a stay-at-home product. And that's one that I put right up there. There's a company called Wix, which we follow as well, which is about capital formation and company formation, which creates websites for entrepreneurs and much more than that, payments programs, et cetera. Another stock that is down substantially, but capital formation and new companies that are being created benefit Wix, and that stock has had a very tough calendar 2021. And that's what we're looking for at JMP, some of these very durable companies that have been beaten down with the entire market. That advanced decline chart you just put up is stunning to show kind of a 10-to-1 decline on a day like today. Tells you something that underneath this kind of recovery, there's a bear market in a lot of stocks, and we're going to pay attention to some of those because in 2022, there's going to be lots of winners out of that dust.
What gives you confidence, Mark, that now is the time to buy those particular stocks? Are they purely at the mercy of the broader themes in the market, which is that group's pulled back and now maybe it's all going to bounce? Or are there stock-specific valuation multiples and metrics that have been hit that just make them attractive to buy now?
Hey, listen, I don't have a crystal ball. No one does. You got a valuation disparity and a stock price disparity from the recent highs that I think is tremendous. Picking that right point to buy that broken or fallen angel is very, very difficult to do. And I think we've seen in the past some of the hugest stocks in the marketplace down 50, 60, 70%. We can name all the FANG stocks, right? Facebook was down, went from 40 to 20 out of the chute. Netflix, as you know, barely survived in some of its earliest days. And I'm not saying Peloton is the next FANG stock. But what I am saying is these are great companies. Their customers love their products. I've yet to see a number two that has eclipsed their kind of marketplace. Wix is another example of that. There's a third company called Doma, which is digitizing the title process. When public via SPAC, that stock's down 40% from the day it went de-SPACed. They're gaining market share and digitizing a process that has basically been the same since when my parents bought their house. That's going to change, and we're looking for things here at JMP that are going to be durable winners over time. And I'm not picking today as the day to buy them. I'm picking three names that I really like.